Hey there, financial explorers. Today we're diving into the thrilling world of balance sheets. Don't worry, it's not as scary as it sounds. Think of a balance sheet as a snapshot of a company's financial health at a specific moment in time. It's like checking your financial pulse, but for a business. Just like your pulse reveals your heart rate, a balance sheet reveals a company's financial heartbeat. It's all about balance, folks. The balance sheet always has to balance, hence the name. This means that a company's assets must equal its liabilities plus equity.
Ahoy, mateys! Let's talk about assets, the exciting part of the balance sheet. Think of assets as your treasure chest of possessions, all the valuable things a company owns. For businesses, assets include things like cash, which is the lifeblood of any operation, accounts receivable, which is money owed to them by customers, inventory, which are products ready to be sold, and property, plant, and equipment, which are the tools and facilities they use to make their magic happen. Some assets are short-term, meaning they can be easily converted into cash, like those delicious cookies you baked and sold at the bake sale. Others are long-term, like that trusty oven that's been churning out culinary masterpieces for years. Understanding a company's assets is like getting a sneak peek into their treasure trove. Okay, now for the not-so-fun part, liabilities. Liabilities are essentially the bills a company owes to others. They can be short-term, like accounts payable, or long-term, like bank loans. It's all about managing them effectively and ensuring they don't become an unbearable burden. Section 4. Equity. Your slice of the pie. Now, for the most delicious part of the balance sheet, equity. Think of equity as your slice of the pie, the portion of the company that belongs to its owners.
Equity is calculated by subtracting liabilities from assets.
Equity can come in different forms, such as common stock, which represents ownership shares in the company, and retained earnings, which are profits that have been reinvested back into the business. Think of common stock as buying a piece of the pie, while retained earnings are like saving some of your pie to make even more pies in the future.
Understanding a company's equity can tell you a lot about its financial stability and growth potential.
Section 5, the balancing act, it's all about equilibrium. Remember that seesaw we talked about earlier? Now it's time to put it into action.
The balance sheet always has to balance, which means that a company's assets must equal its liabilities plus equity.
Let's imagine you're starting a lemonade stand. You invest $10 of your own money, equity, and borrow another $10 from your friend, liability. With this $20, you buy a lemonade stand for $10 asset and have $10 left over for lemons, sugar, and cups assets.
See how it balances? The total assets, $20, equal the total liabilities, $10, plus equity, $10.
For example, let's say you sell $5 worth of lemonade. This increases your cash asset by $5 and your equity retained earnings by $5.
Understanding how transactions affect the balance sheet is crucial for tracking a company's financial health and making informed decisions.
Section 6. Why should you care about balance sheets? So we've explored the ins and outs of balance sheets, but you might still be wondering, why should I care? Well, my friend, understanding balance sheets is like having a superpower in the financial world.
For investors, balance sheets are treasure maps revealing a company's financial strength, profitability, and growth potential.
For business owners, balance sheets are like report cards, providing a clear picture of their company's financial performance.
And for individuals, understanding balance sheets can help you manage your personal finances more effectively.
So, embrace the balance sheet, my friend, and unlock a world of financial knowledge. If you found this guide helpful, don't forget to subscribe, like, and share this video. Stay tuned for more financial insights.